Duke Realty Corporation is one of the leading diversified REITs in the United States. Here to discuss his company and developments in the market is Chairman and CEO of Duke Realty, Denny Oklak. With the slowdown in the economy, how has this affected Duke Realty's development pipeline?
Well, we began slowing down our new development starts back in late '07 as we saw the economy begin to turn, and of course, as everyone knows, the capital markets begin to turn. So we really have started very little product in the last 18 months or so, and what we have started has again primarily been focused on the medical office business with significantly pre-leased buildings. Our medical office business is really focused on on-campus properties that are affiliated with hospitals and adjacent to the acute care hospitals.
What kind of steps has Duke Realty taken this year to fortify its capital structure?
Well, again, we've really been focusing on our balance sheet since we saw the downturn in the capital markets coming in mid-07. But most recently this year, we've accessed, so far year to date, over $1.5 billion of new capital. We did a $575 million common stock offering back in April. And then in August, we were very pleased to re-enter the corporate unsecured debt market. We did a $500 million offering, a $250 million of 5-year and $250 million of 10-year debt back in August. And we were very excited about that because, as everyone knows, the corporate unsecured debt market for REITs has been closed for most of the last 2 years. So we feel it was a great transaction for us, and we're very pleased. And in addition to that, we've done some secured debt, about $350 million, or about $250 million of secured debt also this year.
In general, how do you see the market shaping up in the next year to 18 months?
Well, in our product types, first of all, on the industrial side, I think the industrial market is going to remain slow for a while. Our industrial business is really very reliant on the retail business, so it's reliant on the consumer. So until we see the consumer go back and retailers begin building their inventory again, I think it's going to be a little bit slow. On the suburban office side, it's held up pretty well, but I think when you look at this downturn compared to the last couple real estate downturns we've seen, the unemployment rate is clearly higher than it was. Now, not all of that unemployment relates to office-using jobs, but a fair amount of it does. So I think the suburban office business also is going to be a little bit slow until the unemployment rate starts to tick back down. Now, the good news, I think, on the suburban office side today is most of our tenants don't appear to have a lot of excess space. We haven't seen a lot of tenants wanting to give us space back or terminate their leases early, so I think that's a good sign for the suburban office. And then on the medical office side, that business continues to hold up pretty well, and we'll be focused on new product there and some development starts on the medical office side over the next 12 to 18 months.
For Duke Realty specifically, what do you think will be some of the dominant themes in the next year or two?
Well, again, I think we're going to continue to build the medical office portfolio and to make that a more significant piece of our business. We're also looking and very focused on the bulk industrial side. It's a product type that we really like. We're today located in a major distribution and port markets around the country. We're going to continue to grow that business, and I think you'll see us downsizing the suburban office business somewhat. And the reason for that is we're always trying to keep the quality of our portfolio up, and when you look at our portfolio today, most of the older product is suburban office product, primarily located in the Midwest, and we're going to continue to downsize there.
Thank you, Denny. For more information on this and other REIT news and analysis, check out REIT.com.